Your manager is very liberal then. Your bank manager is very liberal. How many of you having the bank account? Everyone will be having. Okay. Did you took any kind of loans in any banks? Have you taken the loan or not? That's why you don't know. You took a loan? Okay. What is NPA? Have you heard regarding that? No. Non-performance asset. Okay. If any of the customer have took a loan and if he didn't repay any single penny for 90 days, then your account will be under NPA. Whatever the collateral you have kept, whatever the property you have pledged, the banks are having the authority to seize your assets and they can sell those in the market in an auction. Okay, in an auction they will sell your property and they will repay their own loans. Okay, the first stage, the NPA is round about, if it is more than 90 days, if you didn't pay any interest rate for whatever the loan you have taken and you didn't pay the part of the principal amount also, then it is called as NPA. They will just give the caution for you, your account is under NPA now. Okay, if you don't pay the loan more than 6 months or 1 year, they will give the time for you. They will just remind you, call you. Okay, but you didn't pay the loan till 1 year, it's like a default. Your account will be under default. Now these people, the bank manager will be having the right to seize your property, whatever you have pledged for taking that loan. It might be your house or it might be your vehicle, it might be your agriculture land. Understood? Sometimes, see, think that you have taken the loan. See, if you have taken the loan of 10 lakh rupee, okay. Think that if you have taken the loan of 10 lakh rupee, you didn't pay the loan. Think this is the agriculture loan. Think this is the agriculture loan. One of the farmer has approached the bank and he has took the loan of 10 lakh rupee. And what the farmer should pledge? The farmer should give a collateral as what? Property documents, agriculture property documents. That is RTC or mutation anta karitivi. Okay, utara anta karitivi kannadalli. Okay, yes, RTC itself. Okay, agriculture, whatever the documents is there. And if that farmer didn't pay the loan, okay, at stipulated time, then the bank employees, the manager will be having the right to sell his agriculture land. Understood? If he has just given 4 acres of a land as collateral, if he has given 4 acres of land as a collateral, he has pledged that much of acres of land. If its worth is 1 crore rupee, the total worth is 1 crore rupee also, if you have taken a loan at 10 lakh, they will auction it along with the interest rate. Okay, I think that the interest rate would have become 15 lakh. Okay, along with the interest, it has become 15 lakh. They will only just sell that at 15 lakh itself. If the property worth is 1 crore also, they will not sell it at 1 crore.
Auctions, it happens now.
The IPL auction, the other auctions are totally different. The bank auction is totally different. Understood? Because we don't know that irrigation, see, that land is now it is under the bank. Okay. See here, the agriculture farmer, he has pledged for the bank, and these people are having the right to sell it at any price, but it should be above 15 lakh. Whatever the amount they get, they only keep it at that. Okay, they will not just take only 15 lakh and they will not give all the whatever the amount they have got. Think they have sold at 50 lakh, 50. They will not just deduct 15 lakh and they will not give it for the farmers. Okay, the maximum in reality, I'm telling you, the maximum the auction will start. If the auction maximum is 15 lakh only with the interest rate, the auction will start. The people will bid at 8 lakh rupee, 9 lakh rupee itself. Are you understanding? Then it will cross to 15 lakh only. None of the people will come and they will tell that, Are, that property worth is only 15 lakh, I will bid at 50. Okay? Because see here, the bank employees will also tell, the bank manager will also tell for the farmer, he will give a cautious. He will give the good ideas also for him. If he can't pay the loan, okay, either the family member, tell the family members to pay that loan. Okay, or else just whoever are the family members or friends, tell them to, you can only directly sell the properties and then you can repay that money also. Okay, this is also happens, but sometimes some of the bank, some private banks, what they do is they will default that and they will not help for the property owners. They will directly sell that and they will repay their full amount. Ultimately, who is under the loss now? Farmer. That 1 crore property, now it has sold only at 15 lakh only. See, even though it is a market value is 1 crore, the bank will not sell at 1 crore. Ultimately, how much they want? Legally, 15 lakh itself.
Can't we cross 15 lakhs in auction?
See, whatever the bidders are there, why will they pay huge money and they will get?
And the property worth is 1 crore. If I go for the auctions and if I say 50 lakhs suddenly, bank makes only 50 lakhs, but I will tell 50 lakhs in auctions.
See, they will already publish how much is the debt that farmer is having, how much is the debt that account is having for that property. If it is 15 lakh only, none of the bidders will come and they will just bid it for 50.
It will be like competition.
Yeah, the competition will be like only in few thousands of crores only. None of the people will come and they will bid at 50 in a one stretch. It will increase. If you have bidded at 15 lakh, some of the person will just tell 17 lakh. Next you will tell only 18. It goes like that. Understood? Whatever they seize, the total money is under the hands of bank itself now. They will not take only 15 lakh and they will not give the extra money for the farmer. Why? Because the farmer has put just given as a collateral. Now who is having the ownership? Bank is having the ownership. It is under default. Legally it is under the default. Now the ownership will be in the hands of bank. Bank can either make a profit. Okay. Or if none of the bidders have come forward and the highest bidding is only 12 lakh, if the bank agrees for that, it will sell it only at 12 lakh also. And 3 lakh will be under loss. It happens not for agriculture property, it happens for business kinds of loans. Industrial loan, airlines, okay, Kingfisher Airlines, the same way it has happened. Okay, it was under a huge loss, 10,000 crore, I think so. The total loan was. The SBI bank didn't sold that total property at touch. There is a ARC committee. Okay, that committee will just hand over all the property and part by part it will sell. Okay, if the demand rises for that property, they will sell and they will repay their money back. Understood? Now that property worth more than 10 crore, during that time, during 8 to 10 years back, that property was not that much of worth. Now it is having a lot of worth. Are you understanding? If the bank agrees to sell that property in future also, they can just keep it the same way, and once the demand increases, they can sell the property and they can repay their loan. Okay, this is what it happens. Okay, especially the business loan, the industrial loan, that is too risky. Those will be under default itself, and bank will also go under bankruptcy or insolvency. Okay, whatever the depositors, 50,000, or some of the poor people would have deposited 50,000 or 1 lakh also, and middle class people have a deposit of 5 lakh or 10 lakh, all that money will be under loss itself. Why? Because these kinds of bank will be giving too much money for business people, rich people, entrepreneurs. If the industries are into the loss, obviously they will not pay the money for the bank. Now the bank will be under default. Whoever have kept a deposit in that bank, that will be totally under loss. Understood? Okay. It is too risky. Okay. That is why they have brought CAR, that is capital adequacy ratio. Very important for your exam. The ratio of a bank's capital to its high-weighted assets ensures banks can absorb losses and protect depositors. Yeah. Minimum it is 8%. RBI requirement is 9%. Let me just explain you in detail. Think that one of the bank is having the capital of 100 crores. One of the bank is having what? It is under profit. Now it is having 100 crores. Now this bank should think of profit and loss, the risk also. Okay. What kind of loans the bank can offer? Different types of loans. Yeah, tell me. Housing loan, then vehicle loan, then agriculture loan, then what kind of loans the bank offer? Then business loan, then education loan, gold loan, then personal loan, agriculture loan I have written. Okay, these kinds of loans will be offered by the bank. Okay, which is very risky for the banks now. Which kind of loan is very risky for the bank? Personal loan. None of the people will take personal loan at crores of rupees. It is like if you are having the salary of 50,000 rupees. Yes, business loan is too risky. Personal loan, it will be in thousands or lakhs. None of the people will be taking personal loan in crores together. If they get the salary of 10 crore per month, they can get the personal loan of 1 or 2 crore per month. Are you understanding? And business loan, most of the people, most of the entrepreneurs, they will take the loans in crores together. They will not take our loans in thousands. Very risky. That loan is very risky. If most of the people took a loan under business loan, okay, and they are in a debt, okay, their companies, their factories, their industries, if it goes into the losses, then they can't pay the whatever the loan they have took in that bank. Okay, then for whom it will be losses? For the bank. Why? Because they have taken this kind of risk by giving the huge loans for the business people. If these business people goes into the losses, if they can't pay the money, whatever they have to get as a loan, then who will be under loss? Bank will be under loss. Now, this is what a CAR is. What the CAR tells is that the ratio of a bank's capital, that bank capital is 100 crore, it should think of profit and loss also in this 100 crore. Think that the business loan is around about 5 crore. If it goes into the losses, okay. If that bank has issued 20 crore, the total worth of 20 crore for businessman as a loan, all the people have paid, but still 5 crore is into the loss. Few of the businessmen, if they didn't pay the loan back, okay, already 15 crore rupees, already 15 crore rupees have been paid, but still 5 more crore is there to repay back. But these businessmen are under the loss. Now this 5 crore should be compensated where? In this 100 crore capital. Understood? Whatever they are having, that much of profit in that capital they have taken, in that only they should compensate that. If this is only, okay, if it is 100 crore, then it is not much risky. In 100 crore, 5 crore is little riskier also. They can compensate that. If the capital is only 8 crore, if the capital of one of the bank is 8 crore and they are into loss of 5 crore, then what is the difference? Only 3 crore. Okay, then it's a huge risky for the banks also. Okay, the risk weighted, whatever they have written, see here, this is the risk weighted asset. If it is 100 crore, if it is 100 crore, 5 crore is not much risky. Till how much? Okay, 9% they can maintain that. Okay, they should not give much riskier loan for the business people. They should take into consideration regarding how much risky is there for us. Okay, because the bank should not go bankruptcy. Bank golu diwali aak hogbardu. That's why. If the bank goes into bankruptcy, obviously the customers, whoever have deposited their amount, they will also be under loss. Understood? You may think that bank employees having only 9 to 5 job. It is not like that. Okay, it is so risky for them. They should work hard. They should maintain each and every record, day-to-day records. If not, their job also, they will be under fire. Okay, it's very risky for the bank employees too. Okay, especially the cashier, manager, the manager, chief manager as well. Okay, because the manager is the one who will sanction the loan. It might be agriculture loan, it might be personal loan, educational loan, every kinds of loans. Understood? Okay. This is what the CAR is. That is tier 1 capital, tier 2 capital. Let us see what is tier 1 and tier 2. Tier 1 capital. What is capital? Capital means huge investment amount. Okay. This capital, the core capital means, what is core capital? The important capital. In that, this might be in the form of shares. Equity means shares, or else disclosed reserve. Disclosed reserves means any worth, any kinds of property it might be. Okay. Any kinds of property means here, it might be a gold also. Some of the banks will keep their reserves in the form of gold, cash also. Okay, and in G securities also. Next, supplementary, that is revaluation reserves, subordinated debt. Whatever the debt they are having, loans. Here the debt means loans. Whatever the debt they are having, everything that should calculate and they can give the loans. CAR is very important. Capital adequacy ratio. What is the NPA rate in India? How much is the NPA currently? Do anyone know? What is the percentage of NPA in India? Just check. Non-performing assets. Initially it was like 4.2, then it came to 3.8. Now how much is the NPA currently in 2025? 2.58. think that in 100 rupees, now only 2.58% of the NPA is happening. That's it. In 100 rupees, only 2.58 rupees is under loss for the banks. Initially, it was 11%, 12% 10 years back. Now, with the help of strict rules and regulations, now the NPA is reduced. See, if the businessmen are under the loss, bank will also go bankruptcy, and people will also lose their money by depositing their amount. That is why the government, what they are doing is they are giving the subsidies for them, they are giving the incentives, they are giving the minimal loans, I mean minimal interest rate loans for the businessmen to survive, and they are supporting the businessmen through the schemes, through the policies. Understood? We should not ignore, the government should not ignore the businessmen, the business people, the companies, the factories, okay, because they are the huge investors. If they goes into the loss, obviously everybody will go under the loss itself. Okay, are you understanding? Okay. That's why the government should support the entrepreneurs, the factories, and also for industries, companies. Next, very important, sovereign gold bond. Have you heard this name? What is this sovereign gold bond? See, this is the supplementary for physical gold. Most of the women in India, what they prefer? Physical gold. Instead of buying physical gold, these people, the men or women, they can invest the money in SGB, that is sovereign gold bonds. This will be in the form of bond, and that is having the worth of gold. If I keep my physical assets of 500 grams in a wardrobe, in a locker, it can't give interest rate for me. If I keep that worth of amount by investing in a sovereign gold bond, at least I will get an annual rate of 2.5% interest rate. Understood? If the physical gold worth 500 gram, what is 10 gram worth? 1 lakh. Okay. Let me take only 50 gram. Okay. 50 gram equal to 5 lakh now. Now, if I buy a physical gold, if I keep it in a locker, I will not get any single penny as an interest rate. Even though it appreciates, the value appreciates, okay, I will not get any interest rate for it. But if I invest that much of whatever the 5 lakh is there in the sovereign gold bond, annually I will get 2.5% of interest rate also. Along with whatever the, if it increases the rate, if the worth of this gold increases in future also, this sovereign gold bond worth also will get increased. Okay, why they have brought this SGB is because in order to reduce the import of physical gold. We are importing lot of physical gold. Do you know or not? We are just importing it from USA, and also we are importing it from Gulf countries. Okay, in order to reduce import of gold, the government of India have brought sovereign gold bond. Let our people of India reduce the buying of physical gold. Let them invest in sovereign gold bond. At least they will get how much? 2.5% of interest rate for their gold in the form of bond. If the gold price appreciate, the sovereign gold bond worth also will appreciate. But most of the people, they don't have awareness regarding this. Understood? See here. It is a government security denominated in grams of gold. This bond will be returned has the government of India and also number of grams that you wanted to buy. Okay, and this is issued by whom? RBI. Okay, this is issued by RBI on behalf of government of India. That bond, okay, that bond will be having the government of India as a header. Okay, this is government of India's bond. This will be issued by whom? RBI. Okay, then it is issued by RBI. Then the customers, the people can buy this sovereign gold bond in a banks. You can visit a banks. You can tell for the manager, just I wanted to invest some money in sovereign gold bond. Understood? This is a scheme that is there in a banks. It's 10 and also what is the benefit? You will get 2.5% of your interest rate for the investment. And also see here, very important, gold price appreciation also. Just concentrate here, don't write. If the presently for 10 gram it is 1 lakh. Okay, I have purchased 50 gram of gold along with making charge. How much it will happen if I make into a jewelry? 5 lakh 50,000 rupees. We should also consider making charge for that. Okay, if I wanted to sell after 5 years, what the jewelry shop owner will do? He will reduce the he will deduct making charge. Okay, and he will just, if it is 24 karat gold, then it is okay. If it is 22 karat gold, again he will reduce that worth. Huh?
With 24 we cannot do.
Yeah, with 24 we can't do this jewelries. Okay, if it is a biscuit, then it is okay. Okay, it might be 18 karat or else 22 karat gold. Okay, and think that the appreciation happens for 10 gram. This might be 1,50,000 after 5 years. After 5 years, if it is 1,50,000 for 10 gram, 1,50,000 into 50, how much? 7 lakh? 7,50,000. In 7,50,000, making charge, reduce the making cost, and also there will be reduction in that. It might be now how much? 6.5 lakh. Okay, but if I invested my money of 5 lakh rupee instead of buying the physical gold, if I just invest the money of 5 lakh after 5 years, okay, after 5 years, I am having an option. Concentrate here. After 5 years, I am having an option to exit from this scheme. I will get 7.5 lakh totally along with my annual interest rate. There will be no reduction of making charge, nothing. That gold bond, sorry, that sovereign gold bond worth 5 lakh rupee currently, after 5 years, it worth round about 7.5 lakh rupees. Understood? Along with that, what I will get? 2.5% as an interest rate. Understood? Whatever the current market price is there, that we will get during that time. Understood? Whatever the market value is there, that we will get. This is one of the good option for investment. Instead of buying physical gold too much. Okay. And see here, you can exit it from 5th year onwards itself. After 5 years, you can exit from that sovereign gold. What is the tenure? Maximum is 8 years. That bond worth only for 8 years. From 6th year onwards, 6th or 7th or 8th year, you can just sell that bond and you can get money back again. After 8th year, again you can invest that money in again buying in sovereign gold bond. Next new one. Okay. And what is the advantage? It is safe. Why? Because that bond is given issued by RBI on behalf of Government of India. In heading there will be Government of India. Government of India, whatever the bond you get, it is not riskier, as I told you in banking chapter. And also no storage risk. If I keep that 50 gram in a home, I may feel insecure that if I go out, the theft might rob that. Understood? There is no safety option for physical gold. And capital gains tax exempt. What is meant by capital gain tax? See, capital gains tax means currently it was 5 lakh. Okay, and after reduction it became 6,50,000. What is the difference now? 1.5 lakh. For 1.5 lakh, you should pay the tax for government. That this is a capital gain. It is a profit for you or not? The 1.5 lakh is a profit for you. For that profit also you should pay the tax in India. That is called as capital gains tax. It might be a shorter capital gain tax or longer capital gain tax. Whatever the profit you get for your property, it might be gold, it might be agriculture land, it might be your commercial land. Okay, if that property, see, let me give an example for you. Think that in Bangalore, the 30-40 site you have purchased at 2 crore rupee in 2025. You will sell that property, okay, in 2030 at the rate of 4.5 crore. Then what is the profit now? 2.5 crore. You have purchased at 2 crore. Okay, in sub-register office. And again you wanted to sell that. This in the same sub-register office. Okay, you will not just give the bond and you will tell that for the purchaser that I have given the property. No, in sub-register office only, there the buying and purchasing happens. Okay, whatever the BDA is there. Okay, and what is the profit now for you? 2.5 crore. This is the profit. For that you should pay the tax for India. That is called as capital gains tax. This is the capital. This is the huge money. This is the property. We will tell it as a capital. For that capital, you have got 2.5 crore as a profit. That is a gains. That is why it is called as capital gains tax. For your capital, you have got a gain. That is why you should pay the tax. Understood? But for sovereign gold bond, there is no capital gains tax. Okay, and see, think that for this money, whatever you have earned, okay, there is no kind of paying the taxes for that. Okay, your capital gains tax is not there for 7,50,000 rupees. Whatever you have invested in a SGB, sovereign gold bond. Understood? This is one of the best scheme they have brought. Most of the time they have asked regarding this question in your UPSC. Also, next is gold monetization scheme. That is launched in 2015. Okay. Concentrate here. This is launched in 2015, and households or any kind of companies or institutions can buy the gold, okay, and they can sell it for jeweler shops or they can sell it for RBI also. Okay, this kind of scheme is brought. Household means who? Who is household? The public. Okay, or the institution means the companies. Okay. Enterprises, any kinds of institutions, they can also deposit gold in their bank under this scheme. They will earn how much? 0.5 percentage to 2.5 percentage of the interest rate. Okay. This is also the same like a SGB itself, sovereign gold bond. It helps to reduce imports, saves forex. How it will save forex? How it will save forex? What is forex? What is the full form of forex? Foreign exchange. What is the foreign exchange? Every nation does the trading. It will it will export and import goods and services. If you export more number of goods and services, if the India exports more number of goods and services, what we will get? Foreign currencies. Okay. If I sell it for USA, think that we have manufactured the phones in India. Okay. And we have exported those phones for the USA. Now USA should pay us in the form of dollars. Okay. In the form of dollars. This dollar is invested, is there in our treasure. Okay. Consolidated Fund of India. Okay. And it is a forex reserve, whatever we call it as a forex reserve. That reserve will be having the dollars now. If we sell for European countries, we will get euros. Okay. British pound sterling. Okay. Japanese yen. Okay. Chinese renminbi or yuan. Okay. These kinds of currencies we will reserve in our treasure. Okay. Once we reserve all these currencies, then whatever the goods we wanted to import, we will utilize these kinds of reserve now. Okay. Think that we want to import oil, crude oil. In order to import crude oil from Gulf countries or from USA or from Russia, here for these countries, we should pay this kind of foreign currencies only, not in terms of Indian currency. Because India currency is not having any kind of value for trading purpose. We should do the trading only in terms of hard currencies. Hard currency means dollars, euros, British pound sterling, Japanese yen, and also renminbi. Okay, in these kinds of hard currencies only we should do the trading. Okay, in order to export the goods, we will get the currencies that will be reserved, and whenever we wanted to import the goods, different types of goods, we should pay them again in the form of foreign currencies only, not in terms of Indian rupees. Indian rupees can be traded within India. Understood? The USA people will not just buy the goods and they will not sell us the goods and we can't give them the Indian rupees there. We should convert the Indian rupee and we can give them into dollars. Understood? Is there any doubt? This is regarding the banking totally. Just study the current affairs also, the Hindu newspaper. There you will be seeing forex. During 1990s, when there was a BOP crisis, balance of payment crisis. What is balance of payment crisis? Foreign exchange crisis. Forex reserve was too less. We can do the trading only for 14 days during that time. For 15th day, we don't have any kind of reserve. That is why The finance minister during that time in 1990s, the finance minister was Manmohan Singh and prime minister was Narasimha Rao. They have took an initiation for LPG reforms in India. Okay, liberalization, privatization, globalization. During that time, they got to know the worth. The government of India got to know the worth of forex reserve. Understood? Our India till 1990, it was kind of a closed economy itself. It don't wanted to do the trading with the other nations. Okay, why? Because these Britishers came to India to do the trading. Actually, do you know that? They came to India to do the trading and then they have captured the territories of India. Then it came into colonization. This is why the government of India was afraid after the post-independence to do the trading with the foreign nation. Okay, that is, government of India thought that we will become a self-reliance. We don't want to do any trading with any kinds of foreign nation. Otherwise, they will come in the name of trading and they will capture the India. Till 1990, that is why our government of India had this kind of thoughts till 1990 for 40 years. In 1991, the LPG reforms have been took place in India. IMF have given their reforms, that is International Monetary Fund, gave some of the rules, reforms for the government of India. Then there came liberalization, privatization, globalization means doing the trade with the other foreign nation. During that time, more number of exports and imports have took place. Understood? Okay, this is regarding the banking. Banking chapter is covered. Okay. Next chapter is security market in India. What is security market? Have you heard the name security market? What is security market? Have you heard the name? Have you heard stock market? Stocks. What is that? Have you invested money? Have you done trading in stocks? Have you done that? What is that? How you will do? Okay, which are the platforms? Okay, what are the platforms for doing the trade or for purchasing or for buying the shares? Third party apps. Which are the third party apps? There are so many. Which are just let me know. At least, yeah, growth is there. Then angel one, mutual fund.
Different banks are also.
Yeah, different banks are also just purchasing and buying the shares also. Okay, just you can search which are the third party apps for trading purpose, especially the shares. Okay, and also along with that, what is security market? What is definition of security market? See, it is a platform where financial securities like shares, bonds, derivatives. Derivative is one of the instrument. Okay, and also mutual fund units are issued and traded. Buying and purchasing of either shares or a bonds or a mutual fund, that all is called as security market or stock market. There are two types of market. One is primary market, next is secondary market. Have you seen the web series movie or web series 1992? Scam 1992. Have you heard the name of Harshad Mehta? Okay, what was he during that time? He was actually a specific word we say jobber. Okay, just see that movie. There are many movies regarding that. One of the South Indian actor has done Lucky. Lucky Bhaskar. Okay, have you seen that movie? The same way it is. Just write down only this much of definition. That's it. Okay, just concentrate here. In olden days, in 1990s, okay, the stock was being exchanged in a primary market, that too from a company. Why the company sells stocks? Do you know that? What might be the reason? Yes, for investment purpose. See, there is a company called X. Okay, they are already having the investment of 2 crore rupees now. They are into the production. Okay, think that they are into the production of any kind of steel. Okay, during 1990s. Okay. Now they have already took a loan in a banks. Again, they want an investment now. Again, what this company has done is they made this company into the shares, okay, in the form of shares or equity. Okay, these shares was being sold, okay, was being sold in a market, that is customers, public. This public will buy the shares of that company, and in return what this public will give? Money. Okay, this public will invest the money in a stocks. Now what this company will get? The money, the huge investment. Think that again you want 1 crore rupees as an investment. Now he sells the shares, okay, the percentage of his shares for the public now. Okay, by selling the ownership, okay, in percentage, 1% of a share, 2% of a share, 3, 4, 5%, these kind he will sell for the public. Okay, once he sells that, he will get a money from the public. Now in that money he can invest that money in a company, he can expand that company, he can just invest that money by buying the huge machineries. Okay, so in somewhere he can invest the money for that company. Okay, once this company goes into the profit, the shares, the price of the shares will also goes high. Once the price of the shares goes high, the whatever the public have these shares, that price also will go high. Now who are under the profit now? Everybody is under the profit. Understood? When one of the company, they wanted a huge investment, but they have to already loan in the bank also. Again, they want a loan. What they are having? They should list under SEBI. They should register. They should take the license under SEBI. Then they can sell the stocks of their company. Understood? None of the company can establish a few days back and they can start to sell their stocks. No, it is not like that. Firstly, they should take the license from the SEBI, and also they should list under the company's list. In that company's list, if they are listed, then they are ready to sell their shares or equity in a market. Is there any doubt? No doubts. See, this kind of shares will also increase the economy. How it will increase the economy? Economic growth. Will it impact the economic growth or not? I mean, in positive or negative also. If the company expands, or if the company just produce lot of goods, then those production, if the production increases, demand increase. If the supply increases, people will start to buy the goods. If the production is too less in India, what will happen? We can't fulfill the desires of the people. In order to fulfill the desires of the people, government will produce, the companies will produce, the factories will produce lot of goods. Understood? If they produce lot of goods, the people starts to buy, then they will get a profit. Okay, this is how the market works. Okay, in order to help these kinds of companies or factories, that is why the concept of share came into 1990s or 1980s time. Understood? Is there any doubt here? Okay. See, what is primary market? The primary market means the company, okay, is having the jobber. Okay. Company is having the jobber. He is an employee. Okay. Each company should have the jobber. Okay. Harshad Mehta was a jobber. Okay. And these jobber will contact the brokers. Now, brokers will contact the public. This is how it works. Okay, there is company, they will sell the shares for the jobbers. These jobbers will sell the shares for the brokers. Now, brokers will sell the shares for the public. This was different. Then what is called a secondary market is that if I have brought a share, this person 1, okay, will sell that share for a person 2. This is called a secondary market. Okay, if Harsha has a shares of, if Harsha is having 100 shares, he want emergency funds. Okay, and what he will do is he will sell it for Rohan. Okay, this one is called as the trading between the two persons is called as secondary market. Okay. See here, the primary market is where a new securities, that is in the form of shares, these are form of instruments, are issued for the first time, that is from company to the public, that is a primary market. Then what is secondary market? Where existing securities are traded between investors. It is from one person to the other person. Okay. Here they have given BSE, NSE. Okay. Right now, the secondary market are BSE and NSE. That is Bombay Stock Exchange, National Stock Exchange.
They have to trade the secondary market.
See, that was during olden era. Okay. But recently, most of the companies should either get listed in any of the stock exchanges like BSE, NSE. There are different types of stock exchanges in India also, in the world also. Okay.
I'm not a company, I'm purchasing shares. I have to share from some other person. Should I have to tell to the broker and then trading the bill?
Now you are having the app. Okay. Now what you can do is you can buy it and you can sell it at any time in that app itself. Okay. Initially, it was like this. The shares will be in the form of paper during olden era. Okay. Share was in the form of paper. So that you can give that papers, the share papers for him, and he will give the money for you. Yes, directly. No broker. It was like that. And what you can do is, when the price of the share increases, you can directly give it for broker, you can take your money back. Okay, that concept was there in 1990s. The shares was in the form of paper instrument.
Now it's like paper.
No, it is like paperless reserve, 99.9%. Through the third party apps like mutual fund, growth, angel one is there, BSC, NSC is there. Okay. In that you can do the trading, you can invest also.
Even in 1990, the paper, it is authentic.
It was authentic. It was authentic itself. Okay. Then next came the SEBI in 1998. Sorry, 1988. It was a non-statutory body. Then the government gave the powers for it and it became statutory body in 1992. Statutory body means non-constitutional body. It don't come under constitution, but it has established through the act. Understood? This SEBI is not mentioned in the constitution book. This SEBI is not comes under constitution. It comes under non-constitutional, that is statutory. Statutory means non-constitutional bodies. These are established. This body, SEBI, is established under the Act of Parliament. In Parliament, Lok Sabha, Rajya Sabha have passed this SEBI bill. It became into a SEBI Act. Understood? Headquarter is in Mumbai. What is the purpose? To regulate and develop the security market, and also it will protect the investors. For a banks, who is the regulator? RBI. For the stock exchange or security market, SEBI. It was established in 1988. It was been an autonomous body or statutory power. It has got statutory power in 1992 through the SEBI Act. Securities and Exchange Board of India. Full form is very important. They will create a confusion. Just concentrate here. In previous year question, they have given what is the full form of SEBI. They have given securities. Next option, secured. Next option, the different one that starts with S or that starts with E. Okay. Exchanges, enterprises. Okay, they have given with different words. Don't get under confusion. Just analyze that. Okay. Securities. Okay. What is the function of SEBI? First one, regulatory function. Just concentrate here, don't write. It regulates stock exchanges, then brokers, the merchant bankers, and also mutual fund and foreign investment institutions. This all comes under SEBI. SEBI controls all these things. SEBI, the brokers also comes under the SEBI. Okay. And the stock exchanges, National Stock Exchange, BSE, that is Bombay Stock Exchange. There are 7 stock exchanges, Kolkata Stock Exchange, Mumbai Stock Exchange. These will come under the SEBI itself. Next, prohibits insider trading and unfair practices. Okay, illegal works should not happen over there. Okay. Next, registers and regulates credit rating agencies. Credit rating will be given in a Google. You will be searching best IAS academies. For FI rating, you will be seeing more based on the ratings. You will just visit the academy or not. The same way it is there. The credit rating agencies are there. They will give ratings for the companies. Based on good credit ratings, you will be trusting that company and you will invest the money in the form of shares. If it has given, if any of the company has given good credit rating, then you will invest the money in the form of shares. If that company is not having good credit rating, then you will not be having that urge to just invest the money in that company by buying the shares. Okay. Merchant bankers means here the export and import. Okay, there are different. Exim Bank is there. Okay, that kind. Okay. See, merchant banker means here these are the banks. They will give the fundings for trading purpose. Okay, trading means export and import of goods and services also. Foreign investment institutions. That also I will tell you in detail. Okay, foreign investment institutions. FDI, FPI. Have you heard this name? FDI, FPI. That is what FII. Okay. Have you just saw the advertisement regarding SEBI? If any of the third party app does the advertisement in IPL, there are a lot of stock based advertisements you have seen. Yeah, bidding. Okay. And also that comes under SEBI. Okay. Some of these, they will give the cautious. Okay. Angel One, growth, when they promote these ads in between the IPL, okay, they will tell any frauds might happen. Okay, they will just give the cautious for you. Okay. Protective function. It protects whom? Investors, the public. Okay. If the public goes into the loss, automatically the economy also gets degrowth. Understood? Next, educates investors to avoid fraud. It will give the cautious for the investors like the public through the newspaper or through the news channel, also through the advertisement. Okay. If you just visit one of the advertisement regarding any of the third party app regarding shares, there you will be seeing in a cautious. Okay. Any kinds of fraud will be avoided and it comes under the SEBI also. Okay. It all will be given as a cautious. SEBI will instruct the investors. Okay. Provides grievances redressal mechanism. Grievances redressal mechanism means complaint. Okay. Help center. It is like a help center. If you are having any kinds of complaints regarding the stock exchange or shares, you can just directly complain for a SEBI regarding that. It's like an ombudsman. Understood? Okay, next. I will share this PDF 5 o'clock, okay, in the group. Next comes the developmental functions. Promotes electronic trading. What is electronic trading? Third party apps, online, okay, online platforms, okay. Next, promotes fair practices and transparency. How so? What is fair price and transparency? Think that Reliance Industry is selling their shares. Reliance Oil, okay. There are more number of Reliance companies, okay. And if any of the Reliance related organization is selling the shares at 100 rupees, if that 100 rupees is given by the company directly for the public, then it is transparent. If there is any middle person then tells that this worth 1000 rupees, if you invest that money for 1000 rupees, it is 900 rupees loss for you, because the company is selling at 100 rupees itself for one share. Are you understanding? In order to maintain the transparency, SEBI is the one who will bring the transparency between public and also between the company. See, there will be a broker. Broker can take only the commission, not that entire amount. Understood? The broker commission will be only 2 to 3%. Encourages self-regulatory organizations. Next comes the BSc and NSc, very important. BSc is situated in Mumbai. Okay. Okay, let me show you. This is Bombay Stock Exchange. Whatever the trading, it is happening. Okay. Based on the days, 5 days ago, 1 month ago, 6 days ago, or the years also, you can just see timings also. Okay. Second by second, it gets the variation. Okay. Those who are having high knowledge regarding that, they will do the trading also. Initially, there was a time only the rates was get varied only on daily basis. Now it is even for seconds. Understood? I think you have seen these kinds of images in movies also. Here, they will just be, it will just publish the different factories or companies shares. If it is green in color, sorry, if the shares goes high, it will be in green in color. If the shares goes less, it will be in red color. Okay. Just you can install the BSc, NSc or both Angel one also, and you can just see how it works. Okay. Okay. Which is the oldest stock exchange in India? BSE. Okay, that is oldest stock exchange in Asia itself. The first oldest stock exchange in Asia was Bombay Stock Exchange, that was published in 1875. Firstly, I will explain this one. Okay, just concentrate here for 1 minute, then you can write. It was established in 1875. It is one of the oldest stock exchange in the Asia itself, and it is recognized in 1957 under Securities Contract Regulation Act. And what is the index for BSE? Sensex. Have you heard the word Sensex? Okay. And top 30 companies comes under the BSE. Okay. There are more than thousands of companies have been listed under BSE. If they get listed in any of these stock exchanges, then these companies are having the rights to share their shares. They can sell their shares. Next comes the NSE, that is National Stock Exchange. Published in 1992, it started its operation in 1994. One of the important keyword is that the first exchange to provide fully electronic screen-based trading system. Electronic trading was been started under NSE. This stock exchange was started through the paper instrument. Here, the full-fledged electronic trading was started by NSE itself. Okay, its index is Nifty 50. The Sensex, the index of BSE is Sensex. The index of NSE is Nifty 50. Very famous indices. These both are. After the class, just install one of the app and just see how it works. Don't do the investment right now. Okay, without having the knowledge. Arey madam, we don't even have money. How can we do the trading? Okay. Now, there is a question. Okay. There is Government of India, sorry, GSEC. Okay. GSEC bank deposit. Which is very much risky to invest the money. Which is very much risky to invest the money in these options. Is it in government securities or bank deposit or stocks, buying stocks, or just investing in a cryptocurrency? Cryptocurrency. Stocks. You don't know. Okay. For cryptocurrency, there are also third-party apps. Do you know which are third-party apps for cryptocurrency? Just search in a Google. Which are the third-party apps for cryptocurrency and for stock market also. Just see in a Play Store. You'll get the idea. The same like stock market, the cryptocurrency, third-party apps are there. Which one?
Cryptocurrency.
Hmm.
Robinhood.
Okay. Harsha, coin DCX. Is there so? Coin DCX. Then?
Metaverse.
Yeah. Trading Octa. Crypto app. Binance. Very famous one. Binance. Coinbase. Bitcoin. Okay. These are the applications. Okay. Third party apps. In that, they do the trading. Same like Angel One, Growth, like whatever you use it for stock exchange. What? Which one? Cryptocurrency. Cryptocurrency is not banned in India. It is regularized. Okay. But whatever the profits you get, the 30% of the profit should be paid as a tax in India. Cryptocurrency trading is not banned in India. It is regularized. Okay. It is comes under rules and regulations. Okay. With help of rules and regulations, cryptocurrency started to do the trading in India as well. If you get a profit, in that profit, 30% you should pay as a tax for Government of India. Understood? Once the Nirmala Sitharaman has announced regarding the whatever the tax structure for cryptocurrencies also, during that time, within fraction of seconds, the cryptocurrencies, whatever the amount was been totally fallen down during that time for 6 months. Because most of the investor, they don't like to invest in cryptocurrency. Why? Because it was been under the tax now. 30% of the taxes you should pay. The very high risk is cryptocurrency. Then comes the stock exchange. Because in cryptocurrency, the volatility is too much. Lot of fluctuation. If it is 1,000 of rupee, then again it would be in 50,000 also. Again, it will drop down to even 5,000 also. It is having lot of fluctuation. It is very risky regarding cryptocurrency. Then comes the stock exchanges. That is not much fluctuation. It is not having much fluctuation, not much volatility like cryptocurrency. Okay. Then comes the bank deposit. Less number of banks will go bankruptcy. Okay, not every banks will go bankruptcy. It is not much riskier than these one. Last, not risky is, minimal risk is Government of India's securities, that is bonds or treasury bills. Is there any doubt? Yeah. Okay. Okay, the next is important market participants. Okay, so who is broker and jobber and market maker? Okay, these people will play very important role in selling and purchasing the stocks. Okay. What is broker? He is a registered member of a stock exchange who buys and sells security for clients. Clients means here the public, the customers. Okay. Directly who will be in contact with the clients? Broker. Then there is a jobber. Then comes the jobber. Jobber means he is a professional trader in a stock market who trades on his own account, not for clients. Just let me write here. There is one client. This client can approach only the broker. Okay. Now the broker will give the information regarding the shares, from which company you should buy this share, and for how many days or how many years you should buy that share. Okay, that was there in 1980s time, 1980s to till 2000. Okay, they used to have the paper instrument. Okay, this broker used to give the information, and the client used to give the money, and the broker used to give the shares, the paper share. Okay. And here, once the client buys that share, when again the client wants to sell that share, he used to sell it for broker itself. Now, when it is into the profit, okay, think that one share worth during that time, one share worth 2 rupees. He had bought one share worth at 2 rupees. Then, after that share becomes a high price, once that share becomes a high price, like just see it is 5 rupees, broker will call for the client and used to tell, now your company share have been hyped. This is the right time to sell your share. And the client used to give that paper instrument again for the broker, and he used to give the money by deducting his brokerage, the commission, broker commission. Understood? Okay. And for this broker, the jobber used to tell the broker in which company the clients or the broker can invest the money. Totally, the company's worth can be increased and decreased actually by the jobber. He is a mastermind. He used to purchase a lot of shares in order to increase the worth of the company. Okay, see here, there is one of the company. Think there is company called X. This company has told for the jobber that right now I want investment. I want to sell my shares, my company. I want investment. For that, I will give you 10%. I will give you 10% of my profits. Now, jobber, what he will do is, with the help of the whatever the money he is having in lakhs together, okay, he will purchase the shares now. Okay, think that if he wants 5 lakh rupee, this 5 lakh rupee worth share will be purchased by the jobber, and jobber will tell for all the different kinds of brokers now. And this jobber will tell the brokers that this company X price will increase in future. Tell for the clients to purchase now itself. This is the promise this jobber used to do it for a brokers now. Okay, think that one of the share, if one share worth, if it is 2 rupees, okay, this jobber will tell for the brokers, right now the share is just 2 rupees. After 1 month, that share will become 5 rupees. Now, these brokers will approach the clients and they will tell for the clients that right now that company is one of the good company and it is just selling the share at 2 rupees. After 1 month, it will become 5 rupees. Then most of the clients will buy that based on the trust, based on the promises that is made by the broker and also the jobber now. Once the people starts to buy more number of shares, that 2 rupees will become 5 rupees, then 10 rupees, 15 rupees. Understood? If the more number of shares are purchased, then this company will get huge investment. Once they get huge investment, what they will do? They will expand their companies. They will just produce lot of goods. Then they will be into a profit. If the value of that company increases, the price of the share will also increase. Then the clients will get huge profit. This is how it works. Okay. If this company goes into the loss, if the company loses its value, automatically the share value will also get collapse. And the client's money will be into the loss. They will lose the amount. The total share, the total worth of the share depends on the worth of the company, turnover of the company, profits of the company. Understood? Is there any doubt? No doubts. Okay. This is how it was used to get regulated. Okay. From company to jobber, jobber to, there are a lot of brokers. Okay. There was clients also. Okay. On Fridays, in a market, in the floor market, in the share floor market, the jobber used to announce for the brokers that this company is selling the shares and it will just boom in future. Okay, and this jobber used to sell it for brokers and brokers used to approach it for clients. And this is the duty of the jobber now. Once the shares, the profit, whatever the shares prices get rise, jobber used to tell it for broker now. This is the high time for the clients to get their profit back. Understood? The jobber, see, at starting stage, think it is 2 rupees. After 1 month or after 15 days, again the jobber used to tell for broker that now it has been increased it for 10 rupees now. Now again the clients used to take their money back. Once the clients got the trust, other types of new clients will get into purchasing that kinds of shares. Understood? Once the trust has been built in the market, then the company will just be into the profits. If it is 10 rupees after 1 month, okay, then the value of the company again it will get high. Once again it get high, again it is into the profit, then again the new purchasers will also buy it at 10 rupees now. The older customers have bought it at 2 rupees, they have got a profit of 8 rupees. Then the new clients, new customers will again they will just buy it at 10 rupees now. If it becomes 15 rupees, again it's a profit. Okay, this kind of used to be built from jobber to broker, broker to the clients. Yes. See, if I am having only 1 crore of investment, I am producing a pen. Okay, think I am producing a pen and I wanted to increase my production. I'm just having 1 crore. In that 1 crore, I have bought one of the land. I have just constructed one infrastructure for it, bought few machineries for it, and I have bought the raw materials and I have given my labor payments in that 1 crore. Now again, I want to increase my profits, increase my supply of these products. I want to increase the quantity of pen now. What I will do? I want investment. I will just list under SEBI now. Once I get listed and recognized under SEBI, then I am having the right to sell my company's share. Now in the market, I can sell my share by just tying up with a third party called Angel One Growth Apps, these third party apps. And in their apps, my company will get listed. Then the clients, the public can invest their money in my company. Now, my value, once the clients once the clients purchases my shares, what it will happen? My value, my company's value will get increased or not? Okay, I will get the funds, I will get the investment from the public now. Why? Because they will purchase my shares. If in that money, I will expand my supply, I will expand my company. Again, my value will get increased. My company's value will get increased. Once my company's value get increased, automatically my share also will get increased. Understood? For one share at starting, I would have just sold it at 10 rupees. Now, I am having a huge value in a society. I am having lot of turnover. I am having lot of profits. Based on that trust, again the new customers will buy my shares. Now my share would have been at 150 rupees also. For one share, it was just 10 rupees. Now it is worth 150 rupees. Understood? If I go into the loss, if my company goes into the loss, if I don't have turnover, if it is a huge loss, then my value of that share will decrease. Understood? Now you got the point of jobber and also broker now? Okay. Harshad Mehta was actually a jobber. Okay. He used to approach the company. And then in a floor market on Friday, he used to tell for the other brokers that just tell the public to buy these kinds of shares from this company. Okay. He directly didn't approach any kinds of clients. Okay. He used to tell for brokers. He used to call for brokers and he used to tell. And then broker used to tell it for the clients. Okay. Then a market maker. Here the market maker means they will declare the price while buying and selling the share in that same floor rate. Think that I am a client. One of the market maker has told me, today you will get a share, I will get a share at 10 rupees. Okay, after 1 month, he has written in that instrument, okay, share instrument, that after 1 month, you just come and for your share, per share, you just take 15 rupees. Okay. Simultaneously, that market maker will quote the buying price and selling price also. Understood? This is what a market maker is. This is not much risky. Okay. Because the buying price is 10 rupee, the selling price is 15 rupees. He has already announced that buying price and selling price. That is not much risky. Okay, these kinds of market makers were also there during that time.
What if company goes into loss?
If the company goes into the loss, then it is a huge loss.
Then he will pay.
No, the market maker can't pay. It is a kind of risk also. Okay. Think that. Okay, let me just announce. Think there is company. Okay. One of the company, this X company, has sold its share. Now the market maker will just, okay, there is one client. This client have bought that share at 10 rupees. Okay. This client have bought one share at 10 rupees. Okay. After 1 month, this company think that this company is into the profit. Okay. And its different share is round about 20 rupees. But whatever this market maker has already announced simultaneously in that paper instrument, if he just written it is 10 rupees that for that share, he will just sell only at 15 rupees. He will not sell it at 20 rupees. Already simultaneously he have announced and he has written on that day that he has bought it at 10 rupee and he can sell it at 15 rupees. Understood here? But in market, as this jobber and broker are there it might be 20 rupees. There are two types here. One is the company is having the market maker. These employees can sell the shares by disclosing the whatever the price of buying and selling in the paper instrument. But there is the other kind of trading, that is through the jobber, through the broker. Okay, there they will not reveal the selling price here. Only purchasing price can be revealed for the clients. But once the clients in future, if that whatever the price increases, then the client can sell that. But there it is already disclosed. They have announced that price. But if it's worth 20, then for this client, 5 rupees is a loss. Why? Because he is getting only 15 rupees there. He is not getting 20 rupees. Understood? Here the market maker has already announced. You can, firstly, you just provide it 10 rupees. After 1 month, I will just provide 15 rupees. But this company is having the worth of 20 rupees per share in other trading, that is through jobber and broker. This is much risky. This process is too risky for the clients. Here there is huge profit, huge loss also. Here this is not much loss, not much profit. Understood? Is there any doubt? Next is OFCD. Okay. Optionally fully controlled debentures. See, the bonds might be issued by Government of India or Government of State also, or public sector undertakings. What is public sector undertakings? Government companies, government factories. Okay. Debenture means this is issued only by the companies, the factories. Debenture means these are the instruments, the same like a bonds. Okay, these are the securities. How the government of India sells the securities in the form of government bond or T-bills, the same way the debentures will be issued by the private people, private companies. In order to take the investment, debentures will be in the form of stocks, mutual funds, okay, corporate bonds. And this corporate bond means, yeah, IT company bonds. If they wanted to raise the investment, they will sell their corporate bonds. How the government bonds will be sold, the same way there is a corporate bond. Okay. The next comes the optionally fully convertible debenture. It is a hybrid instrument issued by the companies which can be converted into a shares at a future date. Okay. There was, see, what is this optionally fully convertible debenture? Debenture means it is an instrument. It is an instrument, a paper. Okay. This is having the company name. It is telling that it is promising you that after certain years that your money will be fully converted and given into a money back, or you can fully convert into a shares, or half shares and half money would be given after the maturity period gets over. Understood? For every instrument there is a maturity period. Think it is a 8 years. After 8 years, what you can do? These are the paper instruments. In order to raise the money for any of the companies, what they will do? They will sell these debentures for the people. Once this maturity period for that instrument gets over, these public, what are the clients? These clients are having the option. One is they can fully convert that debenture into a money. Again, they can get their money back. Or else they can fully convert that debenture into the totally 100% shares also. Or else they can optionally, means hybrid, half money and half into the shares. This is kind of options is given for the people. Understood? See, the maximum debentures they can share, I mean the companies can sell is up to 50 only. For 50 institutions or for 50 numbers, for 50 people, it can sell the debenture. But this Sahara company have sold around about 23,000 debentures. That is why there was a fraud case against the Sahara. Understood? Debenture means it is kind of a corporate bond, the kind of a bond itself. No, it is a paper instrument. It is a paper instrument. This can be used by the companies. It can give for the public that I am promising you that after 8 years, you can take your money back with the interest rate of this much, or else you can take our 100% shares, or else in hybrid way. This is what the assurance, it will be in the form of paper instrument. It's like a government bond. It's like a bond itself. Understood? There was a Sahara case, okay, in 2019, I think so. The Sahara company, that is NBFC company. Sahara was a NBFC. That is not a bank. It's a NBFC. It has sold round about 23 million debentures. Okay, for 23 million buyers, it has given its debenture, and it has raised round about thousands of crore of rupees. Then when it got into loss, automatically whoever have bought this debenture, they also went under loss. Understood? The maximum permission, the limit from the SEBI for selling the debenture from one company is only for maximum 50 people. It can sell the debenture, not more than that. But this Sahara company have sold it for 23 million people. 1 million equal to 10 lakh. 23 million means 2 lakh. Yeah, sorry, 2 crore 30,000 people. Sorry, 2 crore 30 lakh people, I think. For 2 crore 30 lakh. For 2 crore 30 lakh people, they have sold this debenture. Understood?
So it can be sold only for 50 companies.
Yeah, not more than 50 individuals or companies. Just write down. I will dictate. As per the SEBI, the maximum number of 50 individuals slash institutions can be sold from one company. Full stop. Example, few years back, the NBFC-Sahara have sold the debentures to over 23 million buyers, and raised over 24,000 crores. And it's a gross violation of regulatory requirements of the SEBI. Is there any doubt? Okay. Then next comes the financial instruments. Financial instruments. First one is P notes. P notes means participatory notes. It's a previous year question. Frequently asked question. P notes, very important. Put star mark for that. Firstly, let me explain FII. Okay. What is FII? What is the full form of FII? Foreign investment institutions. Okay. Under this foreign investment institution, there are two types. One is FDI, one is FPI. That is foreign direct investment. Another one is foreign portfolio investment. FII is of two types. One is FDI and another one is FPI. Firstly, let us study what is FDI and FPI. Okay. Let me give one example for you. There is one US citizen. There is an US citizen. He wanted to invest some money in Indian market, in Indian company. Okay. Think that government of India have announced for the foreigners to invest some money in Indian companies. Okay. Think that Elon Musk is there. There are different types of businessmen are there, foreign investment investors. If the government of India have given them the profits, incentives, and have announced that huge profit you are going to make in India if you invest huge money in India. Okay. This US citizen, if he invests money in Indian company, okay, through the FDI, he will be having the ownership for this company or this factory in India. That is called as FDI, foreign direct investment. Okay, these citizens, the foreign citizens, are having the right to invest money in India. Okay, the government of India have given the option for them that regarding the ownership for Indian companies. If any of the citizen of foreign nation, if they wanted to invest some money in Indian companies, they can establish their own companies here as well. They are having the total ownership for the company. Understood? Is there any doubt? But just see here. What is, you see, after investing a money, after establishing one company here, what it will happen? Think this is one of the factory. Think this is a bread factory. Okay. One of the foreign investor have come to India and he wanted to invest a money in Indian factory by establishing bread factory. Once he establishes the bread factory, then the supply starts. Once the supply starts, it will get distributed in a market. The bread will get distributed in a market. Then the more number of production happens, what will happen? He will get profit. The US citizen will get profit. Along with that, after establishing this company, our local laborers will get the employment or not. These local people will get employment opportunity over there. That is a plus point for Indians. And once this person gets a huge profit, there is a tax called as corporate tax. That should be paid for Indian government. Understood? There are huge advantages for India also. One is our Indians will get labor employment opportunity. Once they get the employment opportunity, our laborers will get the salary. Once they get the salary, they can run their livelihood. Understood? It will help for Indians also. And if he makes huge profit, he should pay what? Corporate tax for India. Again, our government of India got taxes from these foreign people. Understood? This is what FDI. That will include in GDP. Why? Yes, this income will include. Why? Because it is established where? Within India. Either the citizens or non-citizens. I have just told you that. Okay. Yeah, NRI, sorry, citizens and non-citizens, I have already written over there during that time. If any of the foreigner or any of the citizen of India establishes a company or factory, and if they produce goods and services, that comes under GDP. Understood? Because that company is established where? Within India. Within India means it will be calculated under GDP. Understood? Now, if he invests the money, if he establishes this company, this total ownership will be under him itself. Ownership will be given for him only. Our government of India can't capture that, whatever the company has established here, unless and until if he violates rules and regulations, then our government of India can seize that. If we don't violate any kinds of rules and regulation, if we don't do any kind of fraud, they are having the rights to run the company over here by investing the money. Is there any doubt? No doubts. Okay. Then see here, next one, FPI. I will just dictate the definition also. Okay. Next is foreign portfolio investment. Think that the same US citizen, he wanted to invest some money in India. Just concentrate here. The same US citizen, he wanted to invest money in India, not by establishing any company or factory here, but he will invest the money in already established Indian companies. Already established Indian companies. Okay. Here, what he will get is, if he invests the money in already established Indian companies, he will get the shares or equity, the kind of ownership, a kind of equity only, the shares only. He don't want any kind of ownership here. He will tell that I wanted to only invest the money. I don't want any kind of ownership, but I want only the shares. So that this company can just give the shares only. And if again in future, if he sells that shares, he will get a profit. That's it. Is there any doubts? Here there is an ownership. Here there is no ownership, but in both of them there is a profit. In both, for the investor, in both these types, there is a profit. But here there is no ownership. Sorry, here there is ownership. Here this investor don't want any kind of ownership. He just tells that I wanted to just invest the money by purchasing the shares. That's it. In future, he will sell the shares. When the prices are high, he will take a profit. He will just go back. This is what it happens in FPI. This is a portfolio. Portfolio means so only for stocks, okay, debentures or else mutual fund. That one. Is there any doubt? Should I dictate the FDI and FPI definition? Want me to dictate? No. Yeah. First one, right? First one, FDI. FDI refers to the investment made by foreign entities. Foreign entities means companies, okay, foreign companies or individuals. Foreign entities or individuals. By investing their money in a long term by establishing a company in India. Full stop. This investor will be having the ownership on that company. Full stop. Write down the advantage for that. Tell me the advantage. It generates local employment opportunity. Full stop. Increase in supply of goods and services also. Full stop. And government of India gets corporate tax and helps to India's economic growth. Which is the country that invests huge money through FDI in India? And how much percentage of FDI inflows to India? That is the assignment for you. You should just Google it. You can just write down and come tomorrow. Okay. First question. Top five FDI investors for India. You should list out the countries. Okay. Next, what is the percentage of FDI inflow? What is the percentage of FDI inflow in India? Inflow. Okay. Sorry. Just put this keywords. Sorry, just put this flow chart. Okay. US citizen is investing money in India through establishing new company. Just put it. It's a new company. New company in India. New company in India. US citizen have invested money in the form of FDI by establishing new company in India. New factory in India. Okay. He is having ownership. Write down it. Write down ownership. He is having ownership for that. For every topic, make the flow chart or a mind map or a keywords. Okay. Next comes the FPI. FPI. Full stop. Oh, sorry. FPI. This is a kind of investment. This is a kind of investment for short term. This is a kind of investment for short term. Full stop. Here, the foreigner, just write down in a bracket, the investor. Okay, just open the bracket and write investor, bracket close. Invest money by purchasing stocks or a bonds or other securities in Indian companies. Full stop. There is no ownership for the investor. Full stop. Okay. Where is high risk in FDI or FPI? Where is more risk? FDI is having more risk because he invests lot of money by establishing one company here. If it goes into a loss, thousands of crores of rupees will be into a loss. Here in FPI, only he will just buy what? Shares or a bonds or any other security. Less risk in FPI, more risk in FDI because he is establishing one new company in India. It is of 500 crores, thousands of crores here. Understood? It is more risky for him. See, FPI, it is only for short term, as you have written in the definition. It is for short term.
A guy is opening a simple company, he has very minimum amount and he asks for the investor from the public and he invests more than 50 or 70%.
If he just invest money only for 2% of the share or 1% of his share, then it is not much risky. If he takes around about more than 50% means it is like ownership itself. More than 50 means 51 means it is strategic investment. Okay. None of the companies will give that much of ownership for another nations, foreign nations. Okay. And sometimes they might give, sometimes they may not. Okay. Okay. Have you understood this one? Okay, next, P notes, participatory notes. Very important. See, there is a foreign citizen, think it is a US citizen, UN investor. He approaches the foreign investment institutions, okay, that is located in USA itself. Okay, in USA there is a bank called as foreign investment institution. Okay, what this US citizen will do is he will approach this FII and he will tell that I want to invest a money in India. I want to invest a money in India, but not through FDI or FPI, but in terms of other means. He wanted to invest, but not in terms of FDI and FPI. There is another option called as P notes, participatory notes. Here, think that he has given $1,000. This US citizen have given for this bank $1,000 to invest the money in India. Now, this FPI will invest the money in Indian companies. Whatever the money he has given, that money will be invested through FII, that is foreign investment institutions. This bank will invest in Indian companies now by purchasing shares or bonds. It is just like a mutual fund itself, but it is in a foreign, that's why it is called as foreign investment institutions. Think that this US citizen is not having much idea regarding FDI and FPI. He don't have any kind of idea. What he will do? He will just go for this bank. This bank will be having, this institution will be having lot of knowledge where to invest, how to invest in India. With the help of this money, these people, this bank will invest the money in Indian company by purchasing shares or by investing in cryptocurrencies in India or else in different areas. It will just invest. Then again, this by investing money in India, again in return it will give a P notes. It is also a paper instrument, P notes. In that it will be just written that you have given $1,000. Okay, and whenever he wanted again his money back, when the profits is huge, he can again issue this P notes for this, and they will deduct the brokerage and they will give the money back. Is there any doubt? They are also like brokers itself. Yeah, they are brokers. They are having a lot of knowledge in which area to invest the money in India, either in real estate or either in stock market or either in bank deposits, either in purchasing government securities. Understood? They are like a brokers itself. They are the brokers. They know in which area to invest the money in India.
But it's a foreign.
It is in foreign.
But it's a government controlled.
Yeah, it is recognized under SEBI also. SEBI has given the permission for these foreign investment institutions. Okay. SEBI only. SEBI has given permission for few foreign investment institutions that they can issue P notes on behalf of India. Okay. Offshore means foreign. Offshore means foreign here. Overseas. Overseas or offshore. Overseas ಅಂದ್ರೆ foreign. This was one of the technique they used to convert black money into white money in India during olden days. Before 5 years back, okay, 5 years back, they used to convert black money into white money. Okay, how means our politicians had a lot of black money. Okay, it might be a politicians or it might be a corporate people. Okay, these people used to send that money for other foreign nations like Mauritius, there is Cook Island, Panama Island, Singapore, USA. They used to send that black money through Hawala transaction also. Have you heard Hawala transaction?
I mean, currency no, na? Why digital money or?
No, this Hawala transaction means mouth to mouth transaction. Means here there will be one broker. Okay, Indian Hawala will be there. He will call and he will tell for USA Hawala that from this politician I have got thousands of crore. Okay, they will not just transact the money through the shipment or something or through the flight. This politician will approach Hawala here, and this Hawala will call for the American Hawala and he will tell, I have got thousands of crore now. It is your duty now that thousands of crore you should give it for this certain specific citizen or that specific person. That person, what he will do? He used to give that money for FII. This person used to invest the money in India through FDI or FPI. Okay. Again, that was converted into white money itself. This was one of the technique they used to follow. SEBI came and they have controlled. They have done rules and regulations. Okay. And now these citizens should give KYC. That is, know your customer. KYC means know your customer, means customer details. Name, age, gender, what is the occupation of this person? Yes, investor details. Okay, investor details, that all should be given now for SEBI. SEBI might ask for these kind of investment institutions that who is the investor? I need the details. Within 15 days or within 1 month, that FII should give the KYC. I mean the details of that person. What is his occupation, his age, his address in that foreign nation also. Everything should be given for the SEBI. It will cross check. Understood? In order to do the money laundering, okay, they used to use this P notes technique. Now there is a rules and regulations under SEBI for transacting the P notes. Now only the citizens who are willing to disclose their details, now they can invest the money in India. Previously it was anonymous. Understood? Previously it was anonymous. The SEBI was not knowing. This much of transaction of money, circulation of money is going on in India. Black money is just circulating from one nation to the other nation and it is coming back here and it is becoming white money. Okay, that is why SEBI has ordered these financial institutions that you should disclose the KYC. If you don't disclose the KYC, then this will be unregistered. Understood? Is there any doubt? There are different types of stages to convert black money into white money in India. One is Hawala transaction, one is offshore companies, shell companies are there, means duplicate companies. So for a name sake, they'll establish the company and they will do the fake billing and fake production balance sheet they will show and they will tell that it is white money. Okay, there are casinos that converts white money into black money into white money. Casinos are not operating in India. It is illegal in India. But in foreign nation, they play a casino. Okay, our Indians might go for the foreign casinos and they might play the games over there. Whatever the money they get after playing that, okay, they can bring that money back here. And government of India will take the taxes, whatever the taxes is there, and it will reduce the tax and it will give the money back. But there is no casinos over here in India. Over there, those are illegal. Okay. Understood? They should pay the taxes also. Okay, cryptocurrency, for transaction of cryptocurrency also they should pay the tax. If they get the profit in cryptocurrency, they should pay the tax. Lottery also they should pay the tax, 30% of the tax. If you win an amount through lottery, you should pay the tax. Yes, KBs also. Kaun banega crorepati? If in that, if you just win 1 crore or 5 crore also, in that 30% should be paid for government. After deducting the money only, they will transfer the amount for you.
Then they will show in the on-front
See, it takes around about 1 month or 2 months of time to transact that money, to send that money for you, for that winner. Okay, within that 1 day, they will not send that money, that huge transaction of money. Firstly, they should pay the taxes for government of India, then they can just transfer that money. Okay, and that kaun banega crorepati, whoever is running that management team, that whatever the source of income, that should be also legal. It should not be illegal. Understood? A lot of norms are there, a lot of rules and regulations are there to run one reality show. People will think that he is having 5 crore in his hands. No, he will get only 3.5 crore, I think so, after deducting the tax. Understood? Again, when he keeps the total amount 3 crore 50 lakh in a bank, in that profit again 30% deduction of the interest rate happens. Understood? There is a tax slabs also. Okay, based on yearly basis, there will be a tax slab. New tax slab will be published. Since it's a huge money, whatever the profit they get, okay, think that monthly if he gets for 3.5 crore, if he invests that 3 crore as it is in bank itself as a deposit, for 3 crore, he might get 3 lakh rupee per month. Think that 3 crore,